Does manual treasury management and operations have your crypto business stuck in the slow lane? Scale up and speed ahead with Fireblocks, the #1 platform for crypto operations and trading pros that makes custody, settlement, and rebalancing quick and easy. Visit fireblocks.com to learn more. This episode is brought to you by Coinbase Prime, an integrated solution that provides institutional investors with an advanced trading platform, secure custody, and prime services to manage all of their crypto assets in one place. Futuristic companies like Tesla and MicroStrategy have used Coinbase's comprehensive investing platform to execute some of the largest trades in the industry. Learn more by visiting coinbase.com/prime to get started today. Eager to make more informed decisions around crypto using data you can trust? Chainalysis demystifies cryptocurrency by providing industry-leading compliance, market intelligence, and investigation support for all crypto assets for organizations like Gemini, Crypto.com, and BlockFi. Maximize your potential with the leading blockchain data platform by visiting Chainalysis.com now. Well, ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, Director of News at The Block. Happy post-Super Bowl Sunday. Today's Monday. I'm trying to keep it together. Busy news morning with the SEC settlement with BlockFi finally getting confirmed, but I got my super coffee. It's keeping me balanced and energized. And I've got two guests on the other side of the mic with more energy and pizzazz than we typically have here at the show. Joining us today is Jeremy Schwartz, Global Chief Investment Officer at WisdomTree Asset Management, and Michael Batnick, Director of Research at Ritholtz Wealth Management. Gentlemen, you guys have been working together in crypto for a little bit. I've been following the past few months, have had a lot of developments in the financial advisory, wealth channels, wealth management intersection with crypto. So there's a lot to unpack today. Thanks for joining us.
It's so great to be here. Huge fan of the show, Frank. So it's a thrill to be on.
Love it.
Well, love having listeners come on the show. It keeps me going, keeps me lively and on my toes. So thanks for coming on. Hopefully being on the show is as thrilling as listening to my voice on a bi-weekly cadence. So walk us through, guys, basically what you've been doing at WisdomTree and Ritholtz to help, clients get exposure to crypto. I know you guys at Ritholtz, it kind of took a while to get convinced of the power of crypto, but you're here with us.
Not an early adopter. Definitely not.
Yeah, but that's okay. You're here now.
Better late than never, right?
Exactly. And hey, it's still early. Maybe it could still be early.
I think so. Well, when you say it's still early, we have to define like early where. Are we early in the price? Well, no, right? We're not early in the price. $300 was early. $2,000 was early. It's hard to say that we're early in terms of the price movement. Granted, we could be much higher in the future, but where we are certainly early, indisputably, is advisor adoption.
So where are we then?
An informal survey, I'd say we're under 1%. And the reason why is because I think that the products that were available to financial advisors have not been suitable, or at least had difficulties getting advisors comfortable wrapping their arms around the solutions. And so that is what we're trying to solve for with the RWM Index.
And maybe Michael give more background on how they came to the journey. At WisdomTree, we've been building ETFs for 15 years in the US. We have a global business, and the regulators across the world, they've allowed easier access. So we have called 350 million in crypto ETPs in Europe, and it includes single coins from Bitcoin and Ether to baskets. Like you could build diversified baskets in Europe, and the US regulators still can't get their heads wrapped around a Bitcoin spot ETF, which we think is the best structure for 100% allocation. And so getting direct access through an SMA type vehicle, you need to get custody at one of the major custodians, and you need a plugin to help make that happen. And it's really just a few companies operating on that. We were investors in OnRamp Invest as a way to help facilitate that. And I know Michael's had a similar journey of trying to figure out how do they get access in those structures. But today, direct access to us is really the best way to get diversified exposure, and the tech platforms to help enable that. You need a tech platform to help enable that.
So prior to this index, the conversations that we had with clients were if they wanted to get crypto, they could go to Coinbase, Gemini, BlockFi, whatever, and open up an account. And it's not overly difficult, and have fun buying, selling, getting a feel for how these things work. But as fiduciaries, we wanted to offer something that we can have control of, that we can build. And the reason why we had to build something was because, not to talk down to any of the products that are out there, but there's just issues, right? There are known issues with some of the products that we can hold inside of a brokerage account. We don't need to rehash them here. We know what they are. And so we, like WisdomTree, we invested early on into OnRamp and spoke to them what we were trying to build, what we really wanted to bring to our clients. To Jeremy's point, we just got a Bitcoin futures ETF, right? Spot, who knows? ETH, who knows? So, but what we really wanted to have exposure to was the broad crypto universe. We wanted DeFi, we wanted the metaverse, we wanted layer 2, we wanted above and beyond just Bitcoin and Ethereum. And if you market cap weight it, you know what ends up, right? You're basically all Bitcoin and Ethereum. And so I called Jeremy, I think over the summer, and I said, hey, what are you guys doing with OnRamp? Like, what are you working on? I see some things, but what are you working on? So Jeremy said, why don't you go first? So I said, what we really want to do is build like a modified market cap weighted index. And he said, we're literally doing the exact same thing. Do you want to just work on this together? And it was a no-brainer from our end. Clearly, we're not like crypto experts by any stretch of the imagination. So Jeremy and WisdomTree, they have a team of experts where we can work with them and say at a high level, what do we want this to look like? And then they have quantitative metrics to say, okay, Aave, Maker, Compound, whatever, like which ones do we want to own?
So there's obviously a lot of indexing tools or index solutions out there. I'm assuming that what made this WisdomTree product more useful is that it plugged into your existing systems in a way that is more seamless than what might be out there. Is that kind of am I gronking that right?
You are. I think a lot of these products were built for the end consumer without an intermediary, and we are intermediaries, right? We work with clients. And so there are certain things, certain I's that have to be dotted and T's that have to be crossed in order for this relationship to work. And so we spent months working on the ops part with the team at OnRamp, in conjunction with Gemini, to make sure that all the pieces were seamless, to make sure that they can integrate with our financial planning software, to make sure that the move money was up to snuff. So a lot of things had to go right. It's not, these are not, this is business to consumer. So it's a little bit different than that, right? We had to build it a little bit differently.
Yeah. And I'm assuming, Jeremy, that it's not trading at a 30% discount, and, I'm not going to have to pay a 2% annual fee on this thing.
Well, that's the issue with a lot of the direct products is a closed-end fund structure, or the futures, which are a different structure. This is an SMA structure where you're actually holding the direct crypto like any, people open their Coinbase or Gemini account. But to do that as an advisor sense, it's not been easy. And even at those traditional firms, it's been not easy to do a basket. Like if you go to Coinbase, they don't have these baskets today. And that's the question, is like, when will Coinbase start getting these baskets together? But OnRamp had coordinated early with Gemini, and so they have others. They have Prime Trust, and I'm sure they're working on other integrations as well. OnRamp's whole point of being is a integration platform as a service to get to things like an Orion performance reporting or Advise-On, and for all these tech stacks that advisors are used to, but then integrate to the crypto world and enable this direct access, and that you're actually holding a diversified direct access basket is the best implementation today. And getting this diversified basket is definitely something we think is a good way to get that beta exposure to the crypto economy.
So can you guys explain, like, for folks who are maybe not totally glued in or plugged into the wealth management world, why is the ability to offer separately managed accounts through like these RIA channels? I think you refer to it, Michael, as, the Godzilla or game-changing moment. But Walk us through why that's important, the SMA aspect.
Well, I suppose if it could be a fund if the SEC would allow it, but they're not, right? And it's it's years away, if ever, that we're going to be able to offer in a regulated manner these DeFi products. And so the SMA structure is a way to do that. And if you were to do this on your own, sure you could do it, but it's expensive, it's annoying, it's hard to do. And so having the ability to do that in just one wrapper is really a great thing. And one other thing that I really love about this is we don't have to chase anymore. And not that we ever had to, but I'm an idiot, right? So like when Facebook changed their name to Meta and all the Decentraland and the Sandbox coins were going nuts, like I said, I'm a dope, and so I bought this thing after it was up 500%, and I just don't want to do that anymore, right? I want to direct my crypto dollars into an index-based product. I don't think that we have the. In fact, I shouldn't caveat that. We definitely do not have the ability to pick winners, right? That's obvious. That's why we're building an index in the first place. Is Bitcoin going to be the one? Is ETH, or is there a layer one killer, an ETH killer out there? Like maybe, fine, we don't know, but this is why like the implementation of the indexes is such that we're not going to force rebalances. And one of the analogies that I gave, and I don't know if this is a good one, but I'll give it anyway. Like as General Electric, as Amazon was flipping General Electric or any of these other stores, for instance, and we were forcing a rebalance, that would not that would not be good for returns. And we suspect a similar dynamic will play out in crypto. And so there's almost inevitably going to be coins that we hold that go to zero, fine. And hopefully the winners will more than make up for the coins that fall by the wayside.
And the structure of the index is we're thinking about it from like this modified market cap way of letting things float. We did want to have some diversification and broad exposure beyond Bitcoin and ETH. So the initial structure last December when it launched, it had something like 36% Bitcoin and 20% ETH, and then a basket of 11 coins at 4%. That sort of moved on, and it's morphed and rotated as the markets have moved. But it's you're trying to get this diversified new and up and coming coins, but you're not going to just buy the losers all the time. I think that's the point that Michael's making. I think is a good one. Is
Yeah, you don't want to take the frank approach to investing in this market. It's the antithesis of what you want to do. Lots of losers. I check every day. I check price, bad price. Price continues to go down for Frank. I do want to double click on you mentioned Coinbase, and it seems like they are catching on to this new game in town. They had an announcement with One River where they're going to offer some sort of platform that would allow managers to get crypto exposure. I think it's in the works still. I don't know if it has properly launched, although they have announced it. You've also got Betterment, the robo advisor. They acquired a crypto robo called Makara. So it seems like we're in a really interesting moment in this market where the eyes, or rather folks have set their sights on this new big opportunity.
The Betterment story is a big story, I think, from that perspective. I mean, it shows this is like one of the traditional firms, and even Betterment has a Betterment for advisors that they've been working with to help work with advisors to onboard things, and it shows that you need these additional. The crypto ecosystem is different than just plug into Schwab and Fidelity. You need the crypto exchanges and custodians to get it integrated, and I think that the Betterment is a sign of tech platforms like OnRamp and the need for more of that integrations. It's good. So it's good to hear of more developments at Coinbase and others.
Jeremy, do we know how many RAAs and how much money they collectively manage? I mean, I think the number that I heard was 11,000 RAAs. I don't know if that's stale.
I don't know.
For who? Betterment?
No, just registered investment advisors across the country. There's over 10,000.
Well, they manage, I think RIAs and wealth managers oversee half of the nation's wealth.
So many trillions of dollars.
Mm-hmm.
If just 5% of advisors put 140% of their portfolio, we're talking some serious. But all kidding aside, like I said earlier, I really do think it's less than 1%, and people are being cautious, right? Because a lot of our clients that have never invested in this before, like what I said is, listen, do I think crypto is going to be a lot bigger today? I'm sorry, in the future than it is today? Yes, I believe that. However, I'm much more positive on the risk part of it. So I'm positive that it will get cut in half. I'm positive that it will go down 20% in a weekend. And so we have to balance those two competing ideas where it's like, all right, I want exposure because I think it's a unique asset class that has the ability to go up. I'm making this up 5x over the next decade. Not too many things have that property, right? Where the risks are asymmetric. But like literally to position size that you can actually get to the final destination, we have to balance those two things because most people are not used to seeing something fall 20% in 48 hours.
And I think the mix of the juxtaposition of the volatility of the asset class and the number of products out there have made this untenable for a lot of advisors. I have a cousin who is a financial advisor and he's always sending me these different indexes and is this one legit? Is this provider legit? Can I trust this, marketplace? And his clients are asking him all the time about crypto. And it's kind of a Herculean task to figure out where to start.
Let me talk to your cousin. And listen, I'll give a shameless plug. That's why we're on the show. We're here to talk about the RWM Index. It's powered by OnRamp, which sits on top of Gemini. And we're advisors and we built this because we wanted a solution, right? We didn't want to have to, if Bitcoin goes to 80,000, scramble to come up with some sort of solution, right? And if Bitcoin doesn't go to $80,000 and it's ETH or whatever the case may be, right? Like very simply, don't put all your eggs in one basket. Let's have a process that is operationally efficient, that is not going to piss off the clients with an unnecessary amount of paperwork or like any headaches. So we've spent the last few months building this for our clients as investors in the company to make sure that this is the best possible solution on the marketplace.
One of the things, Frank, I think there is a generational element when we talk to advisors, and from the very initial launch of this index, we'll talk to there's a $6 billion RIA on the West Coast, and it was the younger generation was saying they want to start testing this crypto index. Not everybody at their firm agrees. There's people who, your old fashioned gold bugs, and even WisdomTree. We have a element. We have 20, of our 78 billion, we have over 10 billion in gold. We have a large element of gold. And for us, it was thinking about how do we diversify gold? But there's a lot of people who say gold is this hard money. Bitcoin, who needs this new digital money? What is it? There's an old school that isn't looking at it, but the new school is saying Bitcoin could be the new gold, and certainly it has some of those features, at least the fixed supply,
The religion.
yes, it's got all those elements, and
the demand is there, Frank. When we launched this, we had like a form on our website where enter your email address, and when it's ready for advisors, which by the way, it's going to be ready on March 1st. So we were ready to have those conversations. Drop us your email and we'll send you a note when it's ready. And I think we got almost 200 in the first weekend. And a lot of advisors that I've spoken to were like, this is great. We've literally been waiting for a solution like this. And so we're there.
Yeah. Well, I mean, think about it. You had to overcome what Jeremy was sort of alluding to, this idea of just buying in that this is a relevant investment class for you to get into. But then even if you get to that point and you're asking, someone's trying to figure out how to do it, it's just too complicated, too expensive. And the platforms out there couldn't really serve that need. Even if you got the thesis and you had your come to crypto moment, you still couldn't necessarily very easily invest in the market itself.
And so that part of it, the messaging part is tricky. I think that the way that we approached this was we were very vocal about this. And so all of our clients knew that this existed. And if they expressed an interest in crypto in the past, well, now we think we have a great solution for them. We're not putting this in model portfolios. I'm not putting laser eyes in my profile and saying you need to buy because it's going to the moon. And so I think that like advisors are, have to be careful because they don't necessarily want to push this onto somebody who doesn't really understand. And most advisors, frankly, like don't understand very well what it actually is and all the moving parts. I mean, you guys, we spoke to Larry, and I think one of the things that he said was you guys have 60 research people or whatever it is. And even you can't, it moves so quickly. So I think that most advisors are thinking about this the same way, that, hey, if you have an interest in crypto, here's a sensible way to invest.
We are trying to build model portfolios with crypto. I mean, I think we have a model portfolio business. So I have I'm a global CIO, but we have a CIO of our models business, and we do have custom models that have, that we first made available through OnRamp, actually, also of things that could go 5% Bitcoin in a traditional 60-40, 5% in a traditional 80-20, and then some more disruptive tech type models that include Bitcoin and ETH. But ultimately, we want to work with people and how do you incorporate things like this into their traditional portfolios, just like they do any other asset. And that's something that our model team is working heavily on.
When I had Josh on the show, I think it was last spring, I brought up like all of the headlines about the death of the 60-40 portfolio. And he suggested that I go back in history, and it's just time and time again, this isn't a new talking point or phenomenon. But how does crypto maybe shift or change the way people think about portfolio construction?
So we have been, to Josh's point, having the conversation about the death of the 60-40 portfolio. I remember in 2013 there was a conference I was at where this was the title of the panel. So it's been at least, what year is it? Is it 2022?
Yes.
Holy shit.
We're a month and a half in.
It's been almost a decade. And listen, I've been in the camp that forward returns for a traditional portfolio of stocks and bonds are going to be lower. And I'm thrilled to be wrong. I probably first wrote about this in 2016, 2017, because listen, starting valuations matter. Maybe less than we thought, but starting interest rates definitely matter. That's math, right? Like that is just math. We know that with a 10-year at 2%, okay, we're getting 2%. And so you just do the calculus. If 40% of your portfolio is getting 2% and the other 60 is getting, call it mid-single digits, not great, Bob.
Yeah.
And so I think that that's one of the reasons why a lot of macro investors are so enamored with the asymmetric opportunities in crypto. There's really nothing else out there that has the potential, as far as I know, to go up 5x, 10x, whatever it is. Like what's the market cap of crypto right now? 1.5 trillion, give or take.
Yeah.
Like that's still, it's a large number, but relatively speaking, it's pretty small.
Yeah. Fraction of gold, about 1/10. But I guess you can juxtapose that with, if you zoom in, crypto on most of these news events on Russia, on CPI, kind of move directly in line with everything else.
It's a risk asset.
It's increasingly, and you would expect the correlation to rise as it gets used by more in the traditional hedge fund community. Like at first in March, it beats its own drum at very unrelated. And again, it was just a fixed supply and more demand was just pushing the price generally higher. The more it gets used in more mainstream areas and other traders, you would expect the correlation to risk assets to rise. Now, you would expect something like Bitcoin and Ether to see a declining correlation, like where today they're the same, they just move generally with different betas to the crypto market. If Ether is a very different computing platform, it's a source of innovation that people are building on top of. It's very different than the case for Bitcoin. And you would expect that correlation to drop over time, even though today it's trading all in sentiment with what's going on.
Our advisors
on Friday.
Yeah, go ahead.
On Friday, sorry to cut you off, Frank. On Friday, when we saw the CPI print, which is the hottest in 40 years, you saw crypto take a leg lower, significant leg lower. And you're like, what the? I thought this thing was an I don't get it. Shouldn't this be like music to Bitcoin's ears? And thank God I didn't tweet anything, because 40 minutes later it ripped. And then whatever, it's since fallen, but it is an unusual asset. And I'm definitely wrong on this, where I kind of suspected, not kind of, I shouldn't hedge. I suspected that as more institutions got allocated, that the just overwhelming demand would sort of put a floor on the price, or at least make it less volatile. And when I say floor, to be clear, I never thought that a 50% decline was off the table. And I will never say that in any asset class. But I do think that the 80% winters, I would be more than a little surprised if that happens, just because I think that the speed at which institutions get invested is glacial. And so I think that if they decided to go, they're already going, right? So I can't imagine what would cause them to turn around the battleship. And so just based on the money that's waiting to come in alone, I would be very surprised if we had an 80% decline.
Having trouble keeping pace with the crypto boom? When your business is scaling up and your portfolio is growing, you don't want to waste precious time on manual treasury management or settling and rebalancing. Fireblocks can handle that for you with smart, scalable solutions for your crypto business, along with industry-leading security and expertise. They'll take care of the back end so you can focus on the big picture. Visit fireblocks.com to learn more. This episode is brought to you by Coinbase Prime, an integrated solution that provides institutional investors with an advanced trading platform, secure custody, and prime services to manage all their crypto assets in one place. Coinbase Prime fully integrates crypto trading and custody on a single platform and gives clients the best all-in pricing in their network using their proprietary smart order router and algorithmic execution. Futuristic companies like Tesla and MicroStrategy have already used Coinbase's comprehensive investing platform to execute some of the largest trades in the industry. Build a unified investment portfolio with one of the most trusted names in crypto. Learn more by visiting coinbase.com/prime to get started today. Are you eager to make more informed decisions around crypto using data you can trust? Chainalysis is here to help. Chainalysis demystifies cryptocurrency by providing industry-leading compliance, market intelligence, and investigation support for all crypto assets for organizations like Gemini, Crypto.com, and BlockFi. Gain unparalleled visibility and maximize your potential with the leading blockchain data platform by visiting chainalysis.com now. Well, I think you're right. And it's not even just like the large institutions that maybe have been sitting on the sidelines, but the crypto native players, they're bidders. They're bidders at an 80% drawdown if it were to happen. I mean, you have firms like Paradigm with $2 billion, a new $2 billion venture fund. I'm sure the fund itself is an order of magnitude larger than that. I mean, it's probably a $10 billion fund at this point. You've got the A16Zs of the world. You've got new crypto funds coming online. And that's kind of pulling. I mean, that's creating a floor, I think, in addition to the institutions that you're talking about.
Like I'm one of those institutions. We actually, we have a commodity fund, GCC. It's our leading fund on performance this year. It's up about 10% because, inflation's running hot, commodities are running hot. That was actually before the other Bitcoin futures, 100% Bitcoin futures funds were approved. We were approved to do 3% in GCC a few days before them. And so we had allocated Bitcoin futures. It had dropped. We actually upped our allocation back to the 3% just recently. We've also have it in a managed futures fund that can go long or short on trend. So right now it's the signals aren't in there one, but so that could come back as price gets supported again through a quant model. But it is in our commodity fund, and being an active commodity fund, we were early to do it. We took from the gold allocation to fund the Bitcoin futures there. And I think more commodity funds will have that story to add it over time. The indexes are hard, right? Because they have all these committees to get approved on. But as an active commodity fund, we were able to add it early.
I mean, there are some fairly easy trades out there when it comes to Bitcoin. If you think about offshore, when you have these large leverage blowouts, price cascades down, kind of drags it down further as people, kind of get stomped out. And then every single time this happens, where you have those $1 billion liquidation events, it gradually gets bought up by the institutions, by the crypto hedge funds. They buy up all of those dips, and then price kind of rebounds or gets to where it was before the liquidation event.
One of the things that I read that sort of crystallized this for me was Bill Miller spoke about like his investment in Bitcoin, and he just put it so simply that the supply is increasing at 2% a year, give or take. Do we think demand is increasing faster or slower than that? And to me, that was sort of like, okay, great messaging. And speaking of that, I think crypto has a really big messaging problem, if I may.
Yeah. What do you think is the biggest problem with crypto's messaging?
So I think that for financial advisors who spend 95% of their day working with families and talking about real life problems, they only have so many hours in the day to dedicate themselves to learning about new ideas.
Yeah.
And so if they were to wade into crypto, what's the first thing that they find? It's the loudest, most obnoxious promoters, and it's not very welcoming. I don't think, at least in some
Yeah.
circles. Like if you're just trying to go in, it's so confusing. And so I just think that like that's one of the challenges that I had. And my brain, it broke my brain where on the one hand, I read the white paper in 2013. I didn't get it. I'm not a computer person. It meant nothing to me. I remember reading Andreessen's piece in the New York Times and followed like that. And you have, on the one hand, the smartest, most accomplished futuristic investors in the world saying like, this is going to be a thing. This is going to be a thing. But anytime I tried to go in, and maybe shame on me for not like going in harder, all I found was like noise in my face that didn't even let me get.
Have fun staying poor.
Exactly. I mean, do you think that welcomes people in? Have fun staying poor? And so this is why like it causes animosity from the outsiders. And by the way, I'm not I'm a believer, but I also think that like I understand why it takes people so long to break through. And then the use case, right? Like just very simply, like why does this need to exist? I think
Yeah.
people don't even get there because all they see is the speculation.
Yeah. Do you think the tide's turning on that, Jeremy?
Well, certainly WisdomTree is a big believer in this thesis. I mean, we're sort of today a $78 billion ETF manager around the world, but we're investing for this digital future. And so we think we talked about early days, and to us, it's so much more than product. It's how does it transform our whole business model in some ways? I mean, we're going to be an ETF company for the foreseeable future. I mean, you could say ETFs disrupted mutual funds 30 years ago. And mutual funds are still orders of size actually bigger than ETFs. ETFs will still be the dominating thing for us 30 years from now. But we do have a digital idea. We announced the WisdomTree Prime that is going to be a blockchain-enabled wallet that is going to try to transform a lot of how we do business. And it's going to tokenize a lot of different assets in the wallet. It's going to try to marry spending, payments, investing all together. So we do think this blockchain is early days for how it's all going to change financial services.
Tokenized ETFs of sorts.
Tokenized assets. We've announced tokenized assets from gold and treasuries and things like that. And so we are going to bring those assets to the blockchain as part of the plan.
What's the deal with the Bitcoin ETF? Is this just not going to happen under Chair Gensler? Is he just completely, I mean, there's nothing that could mollify these concerns about market surveillance or whatever is the thorn poking at him about a Bitcoin ETF?
We certainly have our shot in the filings. So we do have filings in the process. They had rejected some of our past filings. We have gone in and tried to revitalize the filings as well.
What's the definition of insanity?
No, we keep trying to do some new things. And so one of the things they want is the protections of the 40 Act. So a lot of these things have to be filed under the 33 Act. And so one of the things of a 40 Act is, and that's unique in our filing, is we now have a traditional bank custodian. So U.S. Bank is a traditional bank custodian. Before, it's been other crypto custodians. So that is a new feature added to our latest filing. There's some other things
Rejected.
other things with Sarbanes-Oxley that we're trying to add to the filing. So, hey, we're doing our best to get over some of the feedback of the protections that they're looking for.
I don't know. I feel like we're gonna have to wait for the new guy or lady to come in.
There are commissioners there who do think that they should do it. So we'll have to see how it evolves.
Frank, can I ask you something?
Yeah.
Or maybe I'd be interested to get your take on this. So the DeFi thing was really cool, like the DeFi summer, and got a lot of traditional financial people interested in these markets and how they work. And I tried to follow along, and as best as I could see, these are like fixed income derivative managers that left JP Morgan to go into DeFi, and really understand all this stuff at it. But it's so complicated. And I think that the barriers to entry were like ludicrously high for most people. And what I'm seeing anecdotally, entry into the crypto market is through NFTs. And I did not suspect that would happen. I was very surprised when a good friend of mine told me that he and a friend of his split a doodle and he's never bought crypto before. And I'm like, really? You bought a doodle?
Well, it's two kind of different audiences, right? When you think about the complexity of the DeFi world, I don't think it's that different from the complexities of finance. It's just taking things and labeling them as something more complex, right? We say basis points in finance. There's no real reason we can just say X percent or whatever, but we say basis points anyway. In DeFi, we call something, X, but really it's just something that already exists in the traditional financial services world. And so those audiences are small. Like the number of people who are interested in like complex derivative structuring is not as large as people who are interested in things that make them feel good. That TAM is unlimited. And that's how I think about the NFT market. I was reading the Wall Street Journal this morning, and it was there was an article about how luxury watches became a darling during the pandemic. There was another article a few weeks ago about the surge in the price of Chanel handbags. So there has been this underpinning trend of luxury goods becoming more expensive, becoming more sought after. And so when you think about that and NFTs, it kind of makes sense that they took off, right? Because that's all that NFTs are. They're a digital representation of these goods that we have in the real world that make us feel tied to a community or give us a sense of clout or empowerment. And so that's why I think there's this sort of bifurcation between the two. One is just finance 2.0, which is only really interesting to computer engineer types and financial services types. But then the other is way more broad, and it makes sense. Like, I don't know if your buddy is in finance, but let's assume he wasn't for a second. Let's suspend belief.
He's not.
He's not. So yeah, I'm sure if I came to him and said, "Hey, listen, like I figured out a really cool way to automate liquidity so that you can sort of peer to peer come in and out of a trade," he's gonna be like, "I don't care about that." But if I say, "Hey, I'm going to give you this JPEG that potentially opens up the doors to you being involved in a community where there's gear, there's swag. It might go up in price, but people are going to associate you with this and think you're cool." That's going to make more sense to him or resonate with him.
Everyone can understand like a cartoon or a JPEG or a smiling, and it's a much more welcoming community. I know there's like a lot of infighting, but just on a high level, like anybody can penetrate and understand it. I was on the phone with the same friend, with he and his wife, a couple of weeks ago at night, talking about on-chain monkeys and the desserts that came to the market. And I said to my friend, "This is what are we doing? This is an insane conversation." But it's me, him, and his wife. He and his wife, neither of them are in finance, but they're all in on this stuff. By the way, they convinced me. I caved. I bought an on-chain monkey because, of course, I did. But the accessibility to crypto coming through these channels is definitely something that I did not see coming. Again, I'm using like a small anecdote, but he's not the only one of my friends.
It's big because then what happens is he gets it. I don't see the Bored Ape community is that much different from Star Trek fans or Star Wars fans. But the difference is now I need a wallet, right? Now I need to figure out how do I hold this stuff, store this stuff. And once you have that NFT wallet, the floodgates open for you to kind of dive into a whole wide range of Web3 crypto stuff. I've been honestly surprised at the extent to which institutions have waded into NFTs. The retail makes sense, but the institutional side is a bit more tricky, right? Because there aren't the custodial solutions that you have for a Bitcoin or Ethereum. But there's been a number of fund launches recently, firms saying that they're going to actually purchase the NFTs themselves as sort of investment strategy of their own. And I think some I don't remember exactly what firm. It was Bitwise, I think. They created an index for NFTs, which just seems I don't even know how that would work. That's
Very similar than anything else. Anything you could put a price and it has a market cap and a total outstanding, you could create these beta baskets of it's not so dissimilar if you think the whole crypto economy as a ecosystem, you're going to try to get the representation in the market and they're going to try to find that there's thousands of them, right? So they want to try to measure what are the most important ones, what are the most valuable ones, and then they can launch a fund to try to track some representative sample of those biggest areas. It makes sense. The more the bigger these assets get, the more you're going to try to put a basket around it.
It's also just hard getting money onto these places, and the user experience, frankly, still stinks. like a lot, before I bought that on-chain monkey. So what do I have to do? I'm not like I don't have 11 ETH just sitting in my MetaMask wallet, right? So I have to buy ETH, which by the way it was like 1.5% at Coinbase. I know I should have used Coinbase Pro for this purchase. Sue me, whatever. But the point is, I bought the ETH and I wanted to transfer it, and I know it takes a few days for the money to settle. I didn't realize how long it took. So I bought some ETH. I wanted to buy this monkey. Here's the message I got. Want to send your ETH? You could send $1,000 in ETH instantly. The rest of your purchase will be available to send in 12 days after your funds arrive. 12 days! 12 days!
I want my monkey now.
12 days, that's 17 years in crypto space. That doesn't work. And so living in the state of New York, I can't get money. As far as I know, I'd love for somebody to reach out and tell me what I should do. I can't get money on my MetaMask wallet directly, like with a credit card or Y or any of the options. I'm restricted because I'm in the state of New York. What do I do? What do I do,
They're
Frank?
keeping you poor up there. That's why I'm in Florida.
There you go.
Yeah, no, it is tricky. I mean, hopefully, FTX US is trying to get their license. They have their NFT platform. Coinbase will have their NFT platform, I think this quarter. So it would be easier once you have the platforms where you can buy them that aren't kind of separated from where you keep your coins. I think it'll be an easier process for you.
NFTs are, and that's still a tiny market. I think, what's the total market cap of NFTs?
1%.
Is it?
I think it's like 12 billion.
12 billion. And how many users are there in OpenSea?
That I don't know off the top of my head, but
I think it was, I don't even want to give a fake number, but in the 1 to 10 million range. Does that sound about right?
Yeah, probably 1 million.
So this is another thing where it's weird because it's hard to say it's early when you look at some of these prices, right? Like obviously it's not early for Bored Apes, but in terms of user adoption, NFTs got a lot of attention because holy shit, this picture of a monkey is worth $3 million. What in the world is going on? But in terms of number of users, it's tiny.
Well, I think also it is, yes, it is an image, it is a JPEG, but, and I'm not saying specifically with Bored Apes, but let's just say, insert NFT.
Let's use a more real life example like gutter pigeons.
Yeah, or we need I need to do the mustache DAO.
Well, the early pet rocks were good, like the ether rocks, and it's like my girls were sitting. I remember sitting at the beach over the summer, and like is when ether rocks were going crazy. It's like so they're cracking jokes at gold here, but it's like you got this pet rock. It's like, okay, my girls could go print some pet rocks here too.
Seriously, and then we can retire, but. There can be like brands built on top of these images, like just in the same way that, Star Wars wasn't just a movie, there's theme parks that are tied to it. There's franchises, there are clothing and swag and derivative series on top of it. And I think you could have a similar situation with some of these NFT brands where they're not just, oh, you own one image out of 10,000, but you're part of like this more broader, maybe, there's a Bored Apes theme park that, one day, and it's tied to that brand.
But I'm with you. Like, I think the right click dismissal of NFTs, even though I understand where it's coming from, I think is misguided.
Yeah, it is funny though. I love joking about that on Twitter. Whenever someone tweets out an NFT, I'll just screenshot it and be like, it's mine now. I can retire. But yeah, no, I think it's super interesting. Maybe one day, who knows, wealth advisors might be looking at a way to help their clients navigate NFT world.
Would not shock me.
Well, because it's like, what do you do when you this is the question, and maybe we can close it with this. There are so many, I was talking with the CEO of Betterment about this, just random rich Bitcoin crypto people now. Maybe you bought your ape at $1 or whatever it was, and now it's, hundreds of thousands of dollars, or you bought Solana at 20 cents and now it's $100 and you're worth millions of dollars now. Who's going to serve your financial needs? Where do you go? Like, all right, I have $5 million in like some random crypto. Who am I talking to about tax stuff, estate planning, philanthropy, all of these things that you would go to a wealth advisor for, but it's not like wealth advisors know how to deal with the NFT world. So it's like, where does this person go?
And Frank, one last thing on that, because I think this part is really important, where people say, how could that Ether rock be worth whatever people are willing to pay for it, or any of these NFTs? I think the thing that most people miss is that, in my opinion, this is not somebody, aside from like Jimmy Fallon and the celebrities, this is not somebody buying $1 million worth of ETH and then being like, all right, let me get allocated to NFTs, right? These are casino chips. And so if I'm at a casino and I place a $100 chip on blackjack, I would never do that with cash. I would never take out a $100 bill and bet it on a single hand. I wouldn't do it. But I'll do it with chips because it puts a gap between us and reality. So I'm looking at Glassnode right now. There's 42,000 ETH addresses with over 100 ETH. 42,000. So this is money that is just inside the system. And so if you've got 150 ETH, you're not thinking, oh, that's whatever $1 million it is. You're thinking that's ETH. You thinking ETH. And right. So you're paying 2 ETH. You're not paying $7,000. You're paying 2 ETH. And so that, when you like look at it through that lens, maybe still silly, but it's easier to wrap your head around.
Well, I mean, it speaks to the sort of point I laid out there, which is there are a lot of people with a lot of money in crypto.
Mm-hmm.
And so it looks like to normal people or regular folks, who are the buyers here? And it's like there are people with 100 ETH just sitting in their wallet, and they're going to play with it. They need to play with it. Where else are they going to go?
And it's fun. It's fun, and they're going up. That helps too.
That definitely helps. Well, guys, I guess maybe some closing thoughts. What are you guys most excited for outside of crypto?
Outside of crypto, there's something else?
Yeah, apparently there's like a whole other market.
Actually, happy Valentine's Day. Well, today's Monday, February 14th. They're doing the closed door meeting today, right, Jeremy?
Yeah.
When are we going to find out what they're talking about?
Should I be scared?
Listen, they're talking about inflation. Inflation is a key story, and the question is, can they have is the first hike going to be 50? You got people saying 50 bips is the first hike, and that people have come a long way for that, and I think that's inflation has become a problem. I think they're going to need to address it. We'll see the March number if they do take that in stride.
But Jeremy, wouldn't you also say that the market did a lot of the hike already? Like look at the 2-year yield.
3 months ago, we were an outlier saying they need to get to 2%, and the market has come quickly that way. How quickly the market has come. So like nobody was saying that before, and now you've got many different banks saying 7 hikes.
So now we're seeing Goldman say 7 hikes. They upped their estimate, I think, last week. How many are we going to get?
We were an outlier. We said 2. We said we're going to get to 2%, which was 8. I mean, that's what we said back in last year. We were saying that.
We're more likely to get a rate cut, in my opinion, than 7 rate hikes. That would be a rate hike at every single meeting. That would be very surprising.
So more around 4 or 5?
Sure. Let's go with it.
Why not? But, so I guess that's what the uncertainty is now. I mean, we know that the rates are going to hike, but the extent to which they are.
And it's all going to be inflation. Like the inflation numbers will tell you, the higher these, if they keep getting more 6s, 7s further than people say, they're going to have to hike. And there's no reason that the Fed should be at 1 if you're getting 5, 6, 7%. I mean, it's not going to combat it. And the question is how quickly it comes back down. But it surprised them way more than they thought. And so I think they're going to address it. And it's not just this Fed put out there. That Fed put that you heard of before, inflation is the real story, and they could surprise people on the upside here.
Yeah, those greedy corporations just need to stop raising prices. I don't know what they're doing.
Those damn grocery stores with their 0.5% margins are killing us.
Evil. They're evil.
At least they're not saying what the Bank of England person said. Don't ask for raises. You shouldn't ask for a raise because that's putting too much pressure on our economy.
Oh, they wouldn't. I've been telling everyone I know to go ask their boss for a raise. So I may be contributing to the problem. I haven't asked for one, though. So to that extent, I'm helping. Well, ladies and gentlemen, thank you so much. Michael, Jeremy, really appreciate you guys joining us today. We're going to have you back on maybe after the 10th rate hike to talk about where you guys see the markets going. Where can people find you? Where can they learn more about what you guys are working on?
I'm on Twitter at Michael Batnick.
Jeremy D. Schwartz on Twitter. We also, for this RTree Index, we have a strategies page on WisdomTree.com. You can find the crypto strategies and a link to the RTree Index. And you can go to OnRamp Invest to learn more how to get access to the index today.
Once again, we've been joined by Jeremy Schwartz, Global Chief Investment Officer at WisdomTree Asset Management, and Michael Batnick, Director of Research at Ritholtz Wealth Management. The Scoop will be back with you again with another great guest, or maybe two guests like today. Have an amazing day.